Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 10th day of October, 2018, and this is the daily report for gold and silver. In their second worst day of the year, the Dow Jones Industrial Average dropped over 800 points today, losing over 3%, closing at 25,598.74 points. A tremendous slide in that particular index. S&P also lost over 3%, 94 points at 2785, but it was the NASDAQ that had the worst performance of the day, losing over 4%, a 315-point drop, closing at 7422. Concerns about the trade dispute now having become an out-and-out trade war really took traders by surprise as we saw this market sell off aggressively. When we look at gold, there was a move into the safe haven asset. Gold futures, for example, are currently up about $6.60, fixed at 1198.10. We did send out a trade alert this morning recommending the initiation of a long position in gold. We'll cover that in detail as we pull up our technical studies. The other precious metals did not fare well at all. The industrial component kicked in silver, closing down 8.5 cents at 1431. Palladium also trading fractionally lower, losing about $1.40 at 1,060, and platinum lost about 0.4% at $825.70. Lastly, the dollar index did close lower on the day, losing about 12 points, and is currently trading at 95.22. Traders, we do have gold higher on the day, currently up $6.60, 1198.10. We did send out a special trade alert this morning recommending that our subscribers go long December gold. Traders taking that call got in roughly at 1196.40, so a little bit below current pricing. Today's upside move in reaction to dramatically lower U.S. equities pricing, and for the first time in quite some time, an actual safe haven play. In other words, we did have the dollar weakening. That contributed some of today's upside move, but at least half of it was based upon buyers bidding up the precious yellow metal. My sense is that we have now come to the realization that this trade dispute has gotten worse. It has become an out-and-out trade war. That's not according to me, but according to a written letter sent to Bloomberg on Sunday of this week by the Chinese Commerce Minister stating that fact. Now, we are certainly not out of the woods in terms of recent pressure that gold has had. I will feel much more comfortable when a couple of things happen. The first thing is that we effectively trade and close above $1,200. That has been the key psychological support level, now resistance level, that's been in play really for the last 3 days. And then, of course, I would like to see a move above the 50-day moving average, and that is residing at 1204.30. I believe that both of those are highly achievable, and I don't see any real major resistance coming into the market until 1217. That, of course, is the 0.618% retracement. My sense is that we have a unique scenario right now in which the market sentiment is shifting. It seems as though we've hit that inflection point when the trade war itself could result in the global economies, not just the Chinese economies, experiencing some hardship. And that's what we saw today, was that frustration as it worked itself out into a lower U.S. equities price and a lower Dow Jones Industrial Average. And traders, in terms of a percentage drawdown, it was the NASDAQ composite that got hit the hardest, actually losing over 4%, 4.08, a 315-point drop. But on a technical basis, the most alarming factor is that when we look at our different moving averages, our 50-day here up on top, which we broke back a couple of days ago, but our 200-day moving average, that was taken out today. And remember, traders, that it is the technician's belief that as a market trades below a 200-day moving average, it is indicating the point in time in which a bull market shifts into a bear market. So this is truly a correction that we're witnessing, and in fact, one of the largest drops this year. We had a major drop, of course, with Brexit, and this came back in February, but a tremendous sell-off in the NASDAQ composite. And interestingly enough, when we look at the entire precious metals complex today, the activity to the upside was limited to gold and gold only. Silver, platinum, and palladium did sell off. Silver actually taking the blunt of the selling pressure, losing almost 0.6% in trading today, a net decline of 8.5 cents, and currently we have silver futures at $14.31. And traders, for gold to experience a dynamic rally, a robust move to the upside, one of the factors we need to watch very carefully is dollar strength or weakness. Because if we get dollar weakness in light of a move to safe haven assets, we will get the double effect of that, and that is what would result in a pretty robust rally in gold. Now, the dollar did close lower on the day, but only fractionally lower because there was support as traders went into bonds, and that, of course, is good for the dollar. But still, even with that, we had the dollar decline about 0.1%, losing 11 points at 95.23. We want to see how it tracks at the 50-day moving average, which is currently at 95.02. We are just a few points away from there. I believe a break below this would really put the next real level of support in the dollar on a technical basis at around 93.50. Therefore, my recommendation is to maintain our current long position in gold and to maintain our current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.